I think the Fed is just like they always do. They're late to the party. And when they're late to the party, they overcompensate. So they're the person that comes in late and they have to make that big scene and jump up and down so everyone notices them at the party. And not to make light of it because it's obviously affecting the economy, but that's what they're doing. They're overcompensating. They did this in 2009 when we saw the collapse. They came out with gangbusters and printed tons of money. Now we're seeing it again on the opposite side where inflation finally reared its ugly head, and now they're trying to play catch up. And the problem with catch up is that they're going to go too far and they're going to push us into recession. So again, I think by the end of 2022 to early 2023, we're probably talking about a recession here.
Hey guys, welcome back to Library of Wealth. Today we have Gareth Soloway on the Jay Martin Show, giving his forecast for Bitcoin and the crypto market today. He says that the key to understanding the market is a mix of comprehending the current macro environment and also being willing to examine the actual charts. Soloway says he uses gold as his security if the grid goes down or banks close. He states that it's essential to begin thinking about what your insurance is in anticipation of an all-out collapse. Gareth says that dollar cost averaging doesn't promise a winning trade, but it's better than staking everything on a single low. Let's listen as Gareth Soloway talks about what he's been seeing in the current market. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
So the main thing right now, and this is what I have currently, which I'm in the long term, I have 5% of my net worth in gold. And usually most of it's physical gold, to be honest. And again, I look at that like insurance, where if I woke up tomorrow and the grid was down, the banks were closed, I couldn't get money out of an ATM, well, at least I got some gold, right? And I think that's important to think about, where it's kind of your insurance policy against all out collapse of the system. Having said that, I also hold for the next multiple years other investments in silver, as well as other metals. Platinum's down here starting to accumulate some platinum. Some of these metals where I believe that inflation is going to be higher than 2% for the longer term, I think that's really going to be beneficial. So those are my main ones. I do plan on picking up Bitcoin. And in fact, in all fairness, at 19,000, I started my beginning hodl position, to use that term, where I basically allocated a percentage of my net worth, same thing, for Bitcoin, and I bought 1/6 of what I want to accumulate at 19, and then basically every 2,000-3,000 lower, I'll buy another 1/6, so up to 5 additional entries. That's dollar cost averaging, safest thing to do. Doesn't guarantee a winning trade, but at least I'm not guessing at a particular low and staking the whole entire amount on that low. So I would strongly recommend people do that as investors. Never believe, and this is interesting. Let me say this. When I was a retail new investor and trader, I would always go into a trade gangbusters because I was like, I'm going to be right. This is a great point. It's going to play out to my thesis. And then I got hammered so many times that I started to say, wait a minute, maybe I should just buy a small percentage of what I want to own. And then if it does go lower, like it often does, I can pick up a little bit more. Usually my thesis ends up being correct. The timing is always the trickiest thing. So dollar cost averaging helps on that front immensely.
Soloway has seen commodities be completely destroyed, which is partly due to the huge move up of the dollar that has been occurring since the start of the year. He believes that this latest push seems to have been the breaking point, as he has been seeing giant declines. Soloway advises that as a trader, now is the time to start becoming focused. He says that when there is a substantial near-term move, his time frame for trades is very short.
So there's some really interesting stuff going on. We've seen the commodities just get absolutely annihilated. And again, part of this is the massive move up in the dollar that has taken hold over the last, really, since the beginning of the year. But it seems like the floodgates were holding for a lot of commodities like oil and gold and silver. They weren't really collapsing early in the year when the dollar was pushing up. But this last push seems to be like the straw that broke the camel's back, and we've seen massive declines, and we're seeing copper just crashing down. So it's been amazing, but there are opportunities. These are the types of markets when you see these kind of crazy drops that you have to start getting interested as a trader. So that's where I am. To be honest, I was inching into some GDX today, which is the gold miners. I was playing around with a little SLV silver down in these ranges, and again, we can look at some charts like that and take a look for sure.
So just for my audience sake, remind us, what is your typical time horizon when you say you're inching into the GDX? Talk to me about your time horizon on a move like that.
Yeah, so when we have a dramatic near-term move like we've seen in the gold miners or gold itself, my time horizon is relatively short for my trades. It's looking for that snapback. Think about a rubber band. You're pulling that rubber band, and when you let it go, it snaps back. So for me as a swing trader, I really love these quick moves because you get this quick reaction. It's almost like dropping a ball from a 10-story building. When it hits the ground, you get this big bounce. And that's what we want to capture when we're trading these. Now, I will say this, I still continue to love gold longer term. I'm a huge gold bug in terms of thinking it still has a ton of upside to go. But again, you know, it's fighting this tide of the dollar just ripping, which is hard. I mean, for a commodity that's traded in US dollars, it's just hard for gold to fight that upward hill.
Now, when you look at a commodity like copper that's been smashed, and you know, as you said, everything's been smashed relative to the US dollar. So when you look at the copper price, is that more of a US dollar story, or is that more of a recession worry story? Does either one of those narratives feel more accurate?
That's a great question, right? So in reality, it's both. I think that's the key, is that, you know, when you've seen this drop in copper and gold, it's a combination. Gold is more just kind of that fear trade, that dollar strength, but copper, there's definitely a component where you have this feeling that, okay, we're now seeing the Fed continue to tighten. We're going to see a recession, maybe a global recession, and then copper is coming down. One thing I want to show you here, let me see if I can show you guys my charts, but you know, it's almost as if the chart kind of predicted what was going to happen here. Because if you look at the trend line, and this is going back to 2006 on copper. So 2006, here was your high in 2011, and look what we were just bubbling up against in 2022 here, and then look at the collapse on copper. Now, one of the things, you know, so copper's been one of my favorite trades here because there is just so much support down here. Look at all this support. So as a technician, look at this area here, and right over here. You should see a big bounce in copper here. I have short-term upside, maybe back to about $4 on copper. So there's some, I mean, it's amazing how we see these prices and they seem ridiculous, like oil, right? Oil was going up, and everyone was starting to say, oh my goodness, we could see $150, $200 a barrel. But if you looked at the chart, let's take a look at the US oil chart here. You can see that if you connect the lows here to here, and this is going back again, 2009 low to this low to here, and then you connect a parallel line from here, the high when Russia invaded Ukraine was exactly at that point, which told me oil's done. You know, and we saw it bounce back and try to get back, but look at the fall we've seen on oil now trading back below 100. So again, it's this combination of understanding the macro environment, but also saying, all right, now let me look at the charts.
Soloway says gold still has a large amount of upside left, even though it's struggling against the tide of the dollar beginning to rip, which is difficult for a product that's been mostly traded in US currency. Soloway also owns enough investments in silver and other metals for the next several years, where he believes inflation will be higher than 2% for an extended period of time. Soloway believes the drop in gold is more of a fear trade, but the drop in copper is definitely an element where he feels that as the Fed is steadily tightening, there is a possibility of seeing a global recession. What do you guys think of Gareth Soloway's opinion on Bitcoin, the crypto market, and the major drop in gold? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.